I'm not a financial advisor. This is not financial advice. Please do your own research. Welcome to the Vinny G Markets channel, brought to you by Vinny G Money. And for those that have been paying attention, we know the markets got rocked hard this week. We're down around 2% across all major indices. We have the S&P 500, Dow Jones, and NASDAQ down 2% across the board. We know we would have been down even more if it wasn't for Friday, where we got a nice recovery. Markets were up around 1% across the board Friday. But if not for Friday, we would have been looking at down 3%. And for those that have been following this channel, we should know the reason why the markets were down this week. It's because of that US 10-year Treasury, our main indicator. If we take a look, it did open up very high for the week at 1.56. It lingered around that 1.55 up until midweek before it started dropping on Friday, which is why Friday we had that nice boost. So before we get into why the US 10-year Treasury rose this week, I do have to admit I was wrong since the last video. I did say the US 10-year Treasury was going to decline after the Federal Reserve meeting was positive that they weren't going to taper. But the reason why the US 10-year Treasury did rise this week is because we do now have the narrative of the US debt ceiling issue not being raised. And that's the whole reason why the US 10-year Treasury rose this week. I did glance over it the other video. I kind of put the issue to bed, saying that the issue would have been resolved as US debt ceiling, that it was going to be raised no problem. But now there seems to be political attacks going on between Republicans and Democrats about raising this U.S. debt ceiling. And to explain it as simple as I can, the U.S. debt is considered one of the safest assets in the world. But with the U.S. not raising the debt ceiling, we would have trouble paying back our current debt. We would be at risk of defaulting on our debt. Now, the U.S. sells their debt in the issuance of Treasury bills and U.S. Treasury interest rates, which is what we monitor on this channel, the 10-year at least, is the return an investor receives back in buying U.S. debt. So if we're at risk of defaulting on our debt, which the U.S. has never done, the U.S. debt has now become a riskier asset. And riskier the asset, the higher rate of return it needs to be, which is why the U.S. Treasury rose this week. But the narrative going on why the U.S. debt ceiling isn't being raised is because the Republicans, they don't want to pass that bill. The fact is they don't need the Republicans to pass this bill. The Democrats, they control the House and the Senate, so they could just pass it without any type of bipartisanship. But the Democrats, Chuck Schumer is saying that he wants bipartisanship, but he could change his mind. But at the end of the day, the Democrats don't really need the Republicans. And in my opinion, this is all about a power struggle. The Republicans, they raised or suspended the debt ceiling under the Trump administration 3 times. So what's the difference this time around? It's all about power struggle. At the end of the day, all these politicians, they're bought and controlled by the Federal Reserve. And if the Federal Reserve wants that debt ceiling to be raised, which I believe they do, trust me, it's going to get raised. So again, I don't see this being an issue as stated in the last video. But again, we might see this play on for the next 2 weeks, as they have up until October 18th to actually raise this thing. It already has been suspended, I believe, as there was a vote 219 to 212. All Democrats except for Reps Jared Golden and Kurt, whatever her name is, supported it. Every Republican but Rep. Adam Kinzler of Illinois opposed it. But because you had that one Republican, it can be considered bipartisanship, and it doesn't have to go into this thing called reconciliation. But reconciliation might be needed to actually raise the debt ceiling. Reconciliation, it's just really a delay in everything. As to this article, some experts say it would require at least 2 weeks for a party line debt limit hike to succeed. Part of that includes a so-called vote-a-rama. I'm not making this stuff up. I don't know what a vote-a-rama is, but apparently it's a real thing, which forces lawmakers to take politically uncomfortable votes back to back in an event that could last for over 12 hours. If we look at another part of this article, Democrats have to put a number on it. Senator Ron Johnson of Wisconsin told Insider they need to show the American public how much they're going to have to increase the debt ceiling to accommodate their deficit spending. That's why they have to use reconciliation. The threat of prolonged vote-a-rama probably wouldn't be enough to kill Democrats' efforts. A wave of amendments would likely only delay the final vote, and Schumer is unlikely to bring the bill into the floor if he isn't positive Democrats are unified in raising the debt ceiling. So nobody knows exactly what's going to happen unless you're a high member of the NWO, so all we could do here on the Vinny G Markets channel is speculate, and I really don't see us not raising the debt ceiling. Democrats, and also trust me, Republicans, know the amount of pain this would inflict inflict upon the people. That pain is going to hit us eventually, but right now we're just kicking that can down the line, eventually delaying everything. Right now, that pain isn't going to be felt. The debt ceiling, it is going to be raised, and we're going to approach this problem at a later point in time, which is why I think December is actually being set up as a terrible month as we enter the 2022 year, as a bill was already signed to avert a government shutdown, but this only lasts up until December 3rd. And what do we know about December? That could be the same time that the Federal Reserve actually starts tapering. So the combination of these two things in December could lead to a very bad 2022 year, which is what we're going to keep our eye on. And just to get a better perspective on this, we see that since 1960, the debt ceiling has been raised or suspended 78 times. We all know since 1960, both Republicans and Democrats have been in office. So this is not a Democrat or Republican issue. It's just a power struggle issue going on right now. And again, if raising the debt ceiling was such a concern, it should have just never been done in the first place. But getting back to the markets, we see that the US 10-year Treasury did start cooling off starting on Thursday. Of course, we see that on Thursday, this is actually Wednesday night, House passes debt ceiling suspension. And also on Thursday, that's where Joe Biden, he signed the bill to avert the government shutdown up until December 3rd. So the combination of those two things towards the end of the week did bring down that 10-year Treasury. And what happened when that 10-year Treasury went down? The stock market went up on Friday. And just to give updates on how the Vinny G Markets channel is navigating these markets, the JP Morgan puts that we sold with $150 strike price, those expired October 1st, worthless, so we kept the premium on those. That's a winner. The Microsoft puts that we sold with a $275 strike price, that's still lingering. That expires on October 15th. Also, paper traded Facebook puts, sold Facebook puts at a $315 strike price with an October 8th expiration. And we sold Goldman Sachs puts, again paper traded, Goldman Sachs puts we sold with a $335 strike price with a 10/15 expiration. So I used the pullback this week as a buying opportunity because I think the debt ceiling issue gets resolved, and that will bring down the 10-year Treasury, which is going to bring the markets up. But we also could take a look at our next indicator, the US dollar index. That kind of has been mimicking the 10-year Treasury. And because the markets were down big time this week due to the 10-year Treasury, you actually see the mainstream media start reporting on this. Well, it's about time. Again, you know where you heard it first. And you see that Goldman Sachs came out stating that it's the interest rates that could hit the stock market. We've been stating that on this channel since inception. So you see that we're looking at the same things these investment banks are looking at, which is what differentiates this channel from the rest of the economic channels out there on YouTube. We're not looking at the stock market to see where the stock market is going. We're looking at the driving factors which move the stock market. And another interest rate that we're going to start looking at is the junk bond interest rate. And reason being is as that junk bond interest rate gets closer to the US 10-year Treasury, which is what's happening, investors could start leaving junk bonds because the risk-reward ratio is no longer worth it. When they could just go into US Treasuries at a similar rate, why would they go into junk bonds? So as this is happening, money could flow out of junk bonds, and these corporations would have to raise capital to pay off their debts. The way they do that is they do it by selling assets. And one thing that's been going on with these corporations is stock buybacks are at an all-time high. And these stock buybacks could decrease since the corporations would no longer be getting funding from their bonds. So this could eventually cause a sell-off as well in the markets. But again, this might take time. I'm guessing that around December, all this stuff could start happening. So we'll continue to keep an eye on this as well. And speaking of interest rates, let's take a look at the Federal Reserve reverse repos. Monday, we were at almost 1.3 trillion. Tuesday, we were at 1.3 trillion. Wednesday, we were at 1.4 trillion. Thursday, this made headlines. We were at 1.6 trillion. And it's interesting to see that Friday we actually went back down to 1.3 trillion. So since we know that these are being used to manipulate the yields, we'll take a look at whether they continue to increase or decrease these amounts. And because on Thursday it made headlines, I wanted to pull up this great article explaining the reverse repos. It's by Yale University. The main thing I wanted to cover on this article is it says on the supply side, the Federal Reserve has used overnight reverse repos to bring in cash to cover its asset purchases and to replace funds the Treasury has withdrawn from the Fed to pay for its stimulus checks and other fiscal programs. And also, it's always a great gauge to see how much liquidity is in the system. The reason why these reverse repos are so high is because these institutions literally have nowhere to put this money, so they park it with the Federal Reserve overnight to avoid having negative interest rates because these money market funds, they can't handle all the money that the Federal Reserve is pumping into the system. The rates would have to go negative because it costs them too much money to hold to hold all the physical cash. And again, I'll leave a link for this in the description because this is a great article about these reverse repos. And with all this money pumping, we'll get into the inflation news this week. Key inflation gauge watched by the Federal Reserve hits another 30-year high. Core inflation rose 3.6% in August from a year ago, the biggest jump in more than 30 years. And also, Uncle Jerome calls inflation frustrating and sees it running into next year after he's been saying that it's transitory, don't worry, inflation will cool off. He's now admitting it's going to run into next year. Also, weekly jobless claims rose to more than expected to 362,000, and continuing claims rose to 2.84 million. And with the US consumer getting hit with these job and inflation numbers, we see articles like this where Walmart, they're scrapping their layaway programs. They're telling their customers they can now use Affirm where there are no hidden or late fees, but some customers can end up paying 10% interest or more on their purchases over a course of the year, depending on their credit rating, according to Walmart. Others may not be eligible because of the lack of approval for credit, or simply because their bank isn't connected to Affirm. Bottom line is, you're going to see corporations start doing this. They don't want to loan people out money anymore. They know people can't pay money back. They know people are hurting, and that's why it's going to be harder in the long term for people to obtain credit. Now imagine how bad this problem could get if the United States doesn't raise their debt ceiling, which is why I find that as almost impossible. So now looking into crude oil, we see crude oil is still well above $75. We also see oil settles near 3-year high ahead of OPEC meeting. So there is an OPEC meeting Monday where they're going to discuss production. We see if their production stays at the 400,000, energy could be seeing $90 in oil prices, and any increase smaller than 600,000, it should still boost the price of crude oil as well. We also have the Biden administration begging OPEC to bring oil prices down again. I don't think they care about that, but we'll continue to monitor this meeting on Monday to see what that does with the price of crude oil. And as we go over the crypto market this week, we see Bitcoin is up nicely. The mainstream media wants to say it's because Uncle Jerome says the United States has no plan to ban cryptos. We know that has nothing to do with it. We know it's because it's the first of the month and Bitcoin is needed as collateral, and that creates buying pressure. Along with Tether has been flat, but we do see some nice pumps going through USDC, along with Grayscale making purchases this week. So look at the timing of these news articles. Last week, and you could check last week's videos, we have China bans crypto, and that's the same week that the CME contracts were expiring. This week, when Bitcoin is needed as collateral, we have Jerome Powell, Uncle Jerome, not banning cryptos in the United States. So they want you looking one way on why the markets are moving, but not the real reason why the markets are moving, which is what's discussed on the Vinny G Markets channel. And we'll take a look at our next article. Morgan Stanley Investment Fund increases exposure to Grayscale Bitcoin Trust by 100%. And we see this is as of July 31st. And as of July 31st, Bitcoin was around 41,000. So that might be a nice short-term support level for Bitcoin, because we know Morgan Stanley doesn't lose money. And since we're talking about cryptos, we'll get into the fourth industrial revolution. We see in this article, Fedex stock has taken a hit. The package delivery company cut its profit forecast for the year as it faces labor shortage and higher costs. And since it has labor shortage, what came out the following week? Aora, Fedex team up on driverless tech to address the trucker shortage. So the problem is created where nobody wants to work, and the solution is we bring on autonomous driving. And this, you're going to see this more often as we move into the fourth industrial revolution, the adoption to robots, drones, algorithm, AI. And also we have over 80% of top 100 public companies using blockchain technology. Again, I want to do a video just solely on the fourth industrial revolution, but that's going to take some time. But for the time being, we stay corporate grinding, we stay on our hustle, we're sticking the market up for what they got. If you like what you hear, continue to tune in. Hulk smash that like button. And as always, I'll leave everybody off with this. The God of the Bible, the God of Abraham, the Father of our Lord and Savior Jesus Christ is real, and may he bless you.
A plan for dealing with a debt default that included prioritization, that included changes in bank regulations, and possibly selling defaulted or non-defaulted treasuries and buying those who are that are. Are any of all of those still on the table? Do you think any of those would work? And what would happen to the economy, in your view, should the debt ceiling not be raised?
So I missed the first few words, but I think I got your question. So it's just very important that the debt ceiling be raised in a timely fashion so that the United States can pay its bills when and as they come due. That's a critically important thing. The failure to do that is something that could result in severe reactions, severe damage to the economy and to the financial markets, and it's just not something that we could contemplate, that we should contemplate. I'm not going to comment on particular tactics or things like that. I'm just going to say that I think we can all agree that the United States shouldn't default on any of its obligations, should pay them when and as due, and that no one should assume that the Fed or anyone else can protect the markets or the economy in the event of a failure, fully protect in the event of a failure to make sure that we do pay those. That's when they're due.
Good. If I could follow up, have you discussed options with members of Congress?
I don't generally ever talk about the conversations I have with elected officials or other appointed officials. But look, you can see that this is a major focus among those who have responsibility for it, and including elected people.
What party controls the House?
The Democrats.
What party controls the Senate?
The Democrats.
I believe we can agree that President Biden is a Democrat.
I believe.
Okay. Senator Schumer, who's a Democrat, and my friend, controls the Senate floor. And he can raise the debt ceiling by just amending the budget resolution, can't he?
It's possible that that could be done.
Yes, ma'am. So why didn't he do it? Why don't y'all do it?
Because
and then
this
we
is,
don't, let me
because
just
this is,
let me just finish. Why don't y'all just do it and then we don't have this fight?
because
Why do you insist on doing it the hard way?
Because it's very important to recognize that raising the debt ceiling is about paying bills that Congresses
I know,
have
but I just
incurred
gave
in
you
the
a way.
past,
I
and it's
don't
a
wanna get off
shared
the subject.
responsibility.
So why
And
don't you, I
Democrats
agree with that.
have,
So why don't you just amend the budget resolution?
Democrats have provided votes in the past when both houses of Congress are controlled by Republicans, when the Republican Party was in the middle of reconciliation. 2017 is a good example, and Democrats pitched in to do their duty to raise the debt ceiling.
But I know all that, and and I appreciate your perspective, but let me ask you again. There's a real simple solution. Why don't y'all just amend the budget resolution? It just takes 50 votes by my Democratic friends and the vice president. Why don't you just do that? Problem solved. Done. Easy peasy. Finish. Let's go have a cocktail.
Well, it will be up to the leadership of Congress to
Were you going to recommend that he do that?
We will confer with them on what is the best strategy to move forward.
Yeah. It's not often, I haven't been around this place as long as you have. But it's not often around here that we have a problem that has an easy solution. And this is a real easy solution. And I get politics. I understand why politically you folks want to have Republican fingerprints on the spending fiscal knife. I get that. But do you really, is your politics so important that you want to gamble here? on the
wanna make
sovereign
sure
debt of the
that the
United
debt-
States when you have a very, very simple solution that you refuse to take?
I want to see that the debt ceiling is raised. As I've said, I believe it would be catastrophic not to do so, but I equally believe that deficits have been run under both Democratic and Republican administrations. It's important to recognize that, and that means that paying the bills for those deficits is a shared responsibility, and it should not be the responsibility
I agree
of
with
any
that,
one party.
very eloquently put, but it's a fact, isn't it? That you and your folks just want Republican fingerprints on the Democrats' effort to tax, spend, and regulate America into Europe. Now, it's your prerogative to do that, but this is all about the administration's desire to have Republican fingerprints on it and later call it bipartisan. And you know that, Madam Secretary, with all the respect I can muster, and so do the American people.